Hello, friends. Welcome to the Alpha Advantage Know Your Markets week for the 11th of July 2026. We start with the US markets. The Nasdaq had a pullback on the upper side with 1.7% gain on a weekly basis, while the S&P was about 1.2% and the Dow actually corrected a half percent after last 2 week rallies. So it was little bit mixed, but the technology stocks again regained back. The tech Nasdaq actually was led by the heavyweight counters like Meta, which rise by around 14% last week, with the follow up of Nvidia at 8% and Tesla by 3.64%. So in last week, 2 weeks, actually the heavyweights led the market to come back up. Even last to last week, Apple also had a very good gain on the upper side, and it is still continuing the upper side with a gain of 2% this week. Amazon also gained by around 1%. So effectively, the Magnificent Seven stocks are getting buying interest once again, and this could be possibly because the result seasons are once again near, and we would be starting the result seasons from next week onwards. Definitely, the leading would be done by the banking stocks. Their results would be coming first, followed by technology stocks by the month end. But the buying interest is once again started in the market. Taking into consideration the last week movements, we had some few negative as well as positive news. We start with the positive news, like the listing of the Korean chip giant SK Hynix. The listing was very fantastic. The IPO was about $26.5 billion. So on the listing date, finally it closed about 13%, which is very good for the AI chip stocks. While on the negative side, we have Oracle. The S&P 500 global rating degraded the stock on its investment in AI infrastructure. Well, that bring the stocks little bit down for the weekend, but overall, if we see, the stock is already moving down even after the quarterly results. So there were positive news well as negative news also in the market related only to the AI sector. As regards to the rise of the stocks last week, Meta steal this show with rising by around 14% in a single week. Well, why did it rise? The reasons are very positive for the stock. A Meta unveiled that they would be starting the production of their own homemade AI chip design. With the start of the new product design, that is the AI chip, their dependence on the third party like Nvidia would be going down, and hence in a longer run the infrastructure cost for AI would definitely come down for the company. So in that way, it is really positive for the company for the future AI related expenses, and that's very good news. Also, there were another news related to Meta. Meta launched the Muse Spark. It's advanced agentic code model, which will be priced at quarter the price which are charges by the OpenAI or Anthropic. So in that way, a new product has been launched in the area of AI, and the prices are kept very low so that they can capture the market and compete with the companies like OpenAI and Anthropic. So that also was a positive news regard to Meta, and that's why we have seen an extraordinary rise in the prices of the company, which is very positive for the future growth perspectives of the company. The stocks looks really good, and I think we can expect further up moves in the coming month. So that was related to Meta. Now, for the next week, what we are looking in the next week for the market. Well, on Tuesday, the 14th of July, we are having the CPI numbers. Last time we have told that basically with the rise of the crude prices, the numbers were very hot, and that would affect the Fed to make decisions regarding a possible rate hike in near future. But after that, the crude prices have cooled down, and they have returned back to below 70 levels, which is very positive. And because of that, the CPI numbers that are expected this week would be in the negative territory. That is a 0.1% minus month on month is expected, and on year, which was 4.2% last time, they are expected to at around 3.8%. So, with the CPI numbers would be coming down, the Fed would be of little. The market participants will be hopeful that the Fed won't be going for an aggressive rate hike in any near future. So let's see. The Tuesday data would be very important for the market, and if it is coming down, it's good for the market. We can expect rally in the market. Now talking about the world indices, Kospi, the highest gainer of year till date, has retraced back in last 2 weeks. It was up around 110% plus percentage in year to date figure, but there is profit booking in last 2 weeks in Kospi, and that has brought down the year till date figure from 110 to 70%. Still 70% is very good comparatively. That is last 6 months year till date return of 70% is really good. But profit booking, since it was already above 100%, which was abnormally high, and because of that we have seen some profit booking in it. As regard to other indices, the US indices are really getting stronger slowly. They are not expecting any major selling pressure, except in the top memory stocks which were down, but they had risen also so much that fall of around 15 to 20% is normal in the total up move. As regarding to Nikkei, the Japanese stock exchange is really very strong. The correction phase is going on, but it's in the small range, and we can expect that the up move in Nikkei should continue in the next 2 to 3 months. So looking at all the indices majorly of the world, we still expect that basically market will be going ahead on a positive territory, and they would add up the gains for the year till date. Only the Indian markets are basically in the negative territory. But looking at the geopolitical situations and all that, with the coming down of the crude prices also, we can expect a pullback rally in Nifty. And currently, definitely, it's down 7.5% year till date. But fresh momentum will definitely bring in more up move, and we expect that this negative of 7.5% would be reduced to around 2 to 3% only in coming future. This week we are adding charts of the S&P 500, Nasdaq, and Dow Jones, and we are stating out the levels which are important. Since the US market is in a sideways range, we have some clear levels which are very important for the future movement of the indices. As regard to Nasdaq futures, the futures are in a range of 31,000 on the higher side, and the lower side 28,000 is very crucial point. You can see in the picture, basically in the chart, that this is the range, and any breakout above 31,000 will bring Nasdaq futures in the range of 32,000 to 32,300 to 32,500. The overall target is around 32,000 plus levels. So after this consolidation, we can expect some fresh up move. As regarding to S&P futures, the futures are also currently in the sideways range. The higher side is 7650 to 7700, while the lower side is around 7250 to 7200. We still expect that basically the S&P is in a longer term uptrend, and because of that our higher side targets are around 8,000 plus levels, which is 8100 is our major target, but we can expect around 8,000 levels in the coming months. Now regarding to Dow Jones, it's already in an upper trend with making new highs every week. That is the all-time high. The upper side target for Dow futures are around 54,000 to 54,100, and lower side there's a support at 51,500. Now coming to the Indian markets, Nifty had a strong supply at its previous high levels at around 24,600, and coincidentally actually the 24,600 was also the 200 DMA SMA. 200 DMA acted as a strong resistance, and because of that we have seen a huge fall in the initial days of the start of the last week. and there was a huge profit booking, but market did stabilize at the lower level, and in last 2 days it recovered more than 50 to 60% of the fall. So in a way, if we speak about Nifty, 24,600 is a very crucial supply zone, but we expect with everything other things being stable, we can expect that the market will take out the 24,600 resistance zone of the 200 DMA, and the upside target would be around 25,500 to 26,000. So maybe the market may spend some time within this range of last week, but we can expect in future that the levels would be broken and higher side of around 25,000 plus level will be seen in coming 2 to 3 weeks. As regards to the Indian markets, actually the heavyweights, the front line, Nifty 50 stocks are still not able to cross the 200 DMA, but in future, definitely in coming few weeks, we can expect a break on the upper side. But the mid cap index is already running at an all time high. Last week, it made an all time high level, indicating that the mid cap stocks are in momentum and they are slowly and steadily gaining momentum. So if Nifty is will be breaking on the upper side, and if Nifty moves by around 500 to 1,000 points, we definitely can expect a strong up move in the mid cap stocks, followed by the small cap stocks also. So we recommend that investors should definitely keep watch on mid cap stocks, selected mid cap stocks. We can get some good return in this area. So for Indian markets, we feel basically investment can be done in mid cap stocks, and that's the area where we can have good alpha compared to the Nifty 50 stocks. With this, we end our this week and Know Your Market series. Happy investing. Thank you.